Welcome everyone, Simon here from the Whales of Wall Street. We have a quant video here today, QNT on the exchange. Some interesting price movements over the last week or so. I've been away on holiday in Malta. If you haven't had it on your list before as a destination, definitely do it. Absolutely incredible place to go and visit. We'll talk about that some other time. But this one here, guys, is very interesting. We're approaching some really critical points in the program of CBDCs, the API integrations, and all these things that are really following the pattern towards that November 2025 switch on for the new RTGS, replacement of the existing SWIFT back systems, as well as the integration and interaction of digital currencies, digital wallets to the general public. We'll cover that in a moment's time. Don't forget to smash that subscribe button if you haven't done so already. Welcome to the channel if you're new. We've got a multitude of different projects and topics on the channel as always, but let's go straight into this one because this is a nice confirmation of Quant's interlacing factor through the likes of Bank of England and particularly through BIS as well. Now, we've covered these kind of collaborations multiple times over the last couple of years since the channel started. I've been involved and integrated in the likes of Digital Pound Foundation events here in the UK and London on a multitude of occasions, specifically this year, where I've met a multitude of quant networks, a fantastic team, along with all the other fantastic people in the Bank of England side of things, the head of technology of SWIFT, all of these participants, if you like, of this growing economic ecosystem of new financial world. And for me personally, I've always said about CBDCs, I'm on a bit of the fence side of it, programmability versus some of the positive sides of it that could come out of it. And there's still a lot of unknown to the general public. But what we can define essentially right now as an investor or as a holder of quant and other projects that are related to this kind of infrastructure is that we want to be involved and invested in the kind of projects that are really going to be heavily integrating, developing, creating the infrastructure for these elements, and quant being a big one of those, right? So just to be clear here, Project Rosalind is something we covered a long time ago. If you remember, we covered Project Jura, Helvetia, Icebreaker, all these different ones over time. But Rosalind in particular is about the API integration, the aspect-tool layer, as it says here, offers a set of standardized functionalities to enable different systems to interoperate. Now, we know quant is a heavy part of interoperability, the allowance of cross-chain platform mechanisms, the ability for other currencies to talk to each other potentially, but more importantly from the institutional level, the wholesale level, is countries being able to talk to countries. And API functionality is very important when it comes to that, of course, because as you can imagine, every banking system around the world, every country in itself, both from a logistical and regulatory perspective, all has its own functionality, all has its own way of working. So you need something, or certainly at least an endpoint or a singularity of a point that can coordinate all of these together in one way. And Quant really heavily defines itself as one of those key aspirational projects and technologies that can do something like this. And we know that it has very good influence within things like Oracle protocols, SaaS, cloud systems, etc. So you can really start defining in your minds what this can actually start to facilitate. I use that word facilitate because that leads us nicely into this first point here. Now, when I was at these Digital Pound Foundation events, they made it quite clear that the wholesale, the institutional level is their ultimate priority at the moment to get defined and regulated properly from a privacy perspective, data, everything and anything. And projects like the Rosalind one and the other ones really start defining the regulatory side, the standardizations, as well as the talking back and forth. I'm not just talking about communication over the phone between these companies. I'm talking about actual technological communication, which is why the API infrastructure is so important here. So we see some really interesting pillars here. So I call them pillars, arguably 5 pillars of the part of the ecosystem, the innovation of what they're trying to achieve. So we know now that also because of the speed at which we are progressing these areas, they are indeed already looking at the facilitation of retail CBDC payments as well. So this is you and I, general public, being able to go into shops and utilizing the digital currency through our digital wallets. We'll come on to that point in a second because this really does all interlace and loop around, guys, as a whole topic. Achieve interoperability, application ledger agnostic. We just spoke about that very briefly, about how everything really needs to come together. It can still operate individually, but also to be able to use cross-border within its own infrastructures or other infrastructures, it has to have that agnostic approach for interoperability. Support innovation, obviously quite understandable. There's going to be a lot of development over these next years coming, because there'll be a lot of technologies, companies out there, particularly from that retail level, when you're infiltrating the existing monetary systems, or how a company buys and sells things, or how it transacts its money into its banks, etc. This all needs to be defined and worked out as well. So you can imagine that there's a big layer here of development and the creation of all this system. Then you need to go and educate people through the technological aspects. If you're going to a retailer, a physical retailer, and saying, you know, how the previous system has worked, you're now going to be able to use this. Education, knowledge, training. It's not a simple thing you can turn on overnight, right? And we know about the global initiative where we're looking at Digital Pound Foundation, UK Pay, all of these organizations, companies around the world coming together to bring this to life. And what's really interesting here, and I can definitely concur with this, because the last Digital Pound Foundation event that I was at, which was back in March, the amount of people that were there was phenomenal, but more importantly, the quality level of people that were there. We're talking about heads of departments in very lucrative infrastructures around the world of the financial institutions. And it's quite interesting to see all this coming together in front of our very eyes, when we've been talking about this speculatively, potentially for 5-6 years. CBDCs in general, actually, guys, by the way, taking a point from the event that I was at a while back, yeah, this was all kind of discussed actually in the 80s, when blockchain was arguably initially investigated as a technology. Just didn't have the forefront knowledge, or certainly the infrastructures like we do now of World Wide Web and all of these practical elements. And of course the demand for things like digital purchasing, digital behaviors, all this kind of stuff as well. So to see this kind of at the end stage is very interesting indeed. And I just wanted to pinpoint this. June 19th, yesterday, the Bitcoin launches inches closer after Project Rosalind CBDC tests. Now, this isn't just focusing on Quant, of course. I don't think it actually mentions them at all. But more importantly here, it's the mention of the BIS London Innovation Hub. You remember one of our first videos we did on our channel was the integration of this London Innovation Hub. Not necessarily suggesting that London wants to be the #1 in the world. I think it's got a bit of time to catch up to be that. But more importantly, there's Quant's mention. There it is. That's nice. More importantly, I made the point, and I've got the video. It's there somewhere. I have to dig out. I said Sunak will be the next Prime Minister because he is pro-crypto. He's part of the World Economic Forum's leadership program, the graduate program, as are pretty much all the presidents and prime ministers around the world right now. Consider them chess pieces, are in place for this switchover. That's what it's about. Personally, I don't think democracy exists. Hopefully, a lot of blockchain technology could change that a bit with certain freedoms within certain chains. But in that concept, I always believe that these governments are leading under one, or certainly one organization, the World Economic Forum, and they come in and out within their parties, or they look like parties to us. That is a load of nonsense anyway, just to bring in each individual transition. And this is the next one, guys. It's absolutely huge opportunity. AI, blockchain, DIDs. This is the big catalyst coming up. So big conversations around API layers. We know Quant's got a big part of that. It's phenomenal to see the token that we're holding in our portfolio and continue to accumulate is going to have such a massive influence in this. Really huge. And that's backed up by this really nice article from Quant themselves. I'll leave it in the description so you can read it. But I'm bringing this conversation to the table, guys, because you remember we covered this back in December, the sample wallet proof of concept CBDC and research. Okay, so we know that there's 20 applicants. We don't know who those applicants are. Hopefully, we kind of hope really that we are holding some of the projects or technologies that might be behind this. It may not even be a cryptocurrency company or project at all. We don't know. But the point being is that this deadline came from the start date of the 16th of January, for 5 months option, with the option to extend by a month depending on how well they were doing. That would take us, guys, to pretty much now. So this hasn't been announced yet about the result about who's being taken this forward. I don't know the next stage, whether there's another few months of practicing or increasing the framework or whatever. The whole principle of this was a $200,000 kind of budget, and providing a proof of concept for a sample wallet for a central bank digital currency, aka the digital pound in this instance. The modulations of KYC, all of these things, the history, data, surveillance, security, and in particular as well, there's a big section in here about APIs, which is very interesting. Of course, we covered all this a while back, but here we go. Demonstrate experience delivering new service and components which are integrated into existing digital services via API integrations. I'd be very surprised if Quant wasn't one of these applicants back in December. I would very much like you guys to know, I haven't done any research on this myself, but any of the countries that you live in, I'd be really interested to know, drop the comments below if there's any concepts and research developments going on in your countries similar to this. It'd be very interesting to see this development. The other point I want to make is here, which we covered a while back. This was recently updated the 1st of June. Consultation closes on the 30th of June 2023. This is an opportunity for the public to basically read the whole entire documentation about this new digital formatting of currency, the utilization of blockchain, crypto, etc., stable coins, you name it, all in here. The opportunity to read that, but then also conclude a survey, your pros and your cons, your concerns in general. And it's not really widely accessible, to the sense that they don't really promote it, they don't advertise it. I made this point at the last Digital Pound event. There wasn't really an answer to it. I know why, because probably in a month or two's time, when they announce everything to the general public, they'll go, hang on, what's this? I don't want this. And they go and turn around and say, well, actually, you had the opportunity. You didn't look for it, which I think is a bit sneaky, because this is such a big change, guys. This isn't just about business. This is about households, and this is about people. And I think it's kind of really disorientating that people haven't had this like overview or access like we would want to see. And exactly the same thing happened with the agricultural bill in 2020. I've gone on about that many times, where it gave farmers pretty much 48 hours to respond to a survey that had been out for a long time, but basically saying that they're going to change the standardization of the qualities here in the UK of food and produce that was imported and exported, and potentially diminish the farming system, as we have seen a catalyst from that point, particularly in India, Holland, and many other countries. And I see this similar principle here. It's kind of sly and a bit disappointing, but not a surprise at all, because that's how they operate most of the time. But the integration of things like buy now, pay laters, the digital wallets that companies are bringing out for their own produce, for their own companies. When we talk about the interaction of physical NFTs, the ability to have cross-border payments with less friction, with less cost, and more speed. The fact here, even here, I don't know if this is, I think this is UK developments here, but the use of digital wallets in store increased by 10% in 2022, and is predicted to account for 21% market share in 2026. Meanwhile, the use of cash in the UK continues to decline, falling 10% of point of sale transactions value in 2022, down from 21% in 2019. Now, there was a big catalyst of this in the pandemic, but one of the really interesting points that came out in the most recent Digital Pound Foundations is this was always on the plan, guys, for the last 5-10 years, to diminish the physical currencies. I'm talking about paper money, coins, and utilize this digital infrastructure. You can ask your senior relatives who perhaps didn't want to ever have a debit card, or didn't want to have to be forced to use a smartphone to be able to bank anymore. The fact that, particularly here in the UK, the amount of banks physically that are disappearing left, right and centre over the last 3 or 4 years, which we covered in a previous video, is happening at an extortionate level, and the speed at which is phenomenal as well. And this is all part of the plan. Putting things like live chats in there, auto response things, so it winds you up. But the point being is that there's less cost for them, there's less overheads. We're using blockchain moving forward, where we're talking about very green mentality, which really makes everyone happy at the World Economic Forum from that ESG perspective. It's all interlaced, guys. It's all part of the same motive and plan. This is why I get so excited when I'm investing in things like Energy Web Foundation, Quant as another example, Ripple, etc., because it's all part of this plan, guys, and it will associate itself with every industry, every sector, every level of purchasing, including commodities, guys. And I'm bringing this up because it's all part of the same topic, the same conversation, and certainly for the next couple of years, 2025, arguably the big switch on of everything, and leading up to 2030's Agenda 30 goal from the UN and the World Economic Forum. Guys, how much more dot connecting do we want to do here to see the excitement and the abilities of this as an investor, and making sure that we invest in the right things? UK crypto, another massive point that's come out today or yesterday as an article which is transferred across a multitude of media outlets. Look at the timing, guys. We're looking at the wallet proof concept and research here in the UK finishing this month. We have the survey finishing this month, and all of a sudden, out of nowhere, the markets, financial services markets bill as a regulated activity towards crypto and stablecoins as a means of payment under existing law has been approved by Parliament's upper house. Now, this probably still has a couple more stages to go, I believe, if I remember correctly from my law education in marketing at university, where you have the House of Lords sign off and so on and so forth to go on beyond that. However, I might even say here, maybe the House of Lords have done it already. I was going to the final stages before it's put into law. Guys, we're on the brink. We're on the brink here. And this is important. New specific rules for the crypto sector could come within 12 months. Isn't it very ironic that all of this stuff comes in within the next 12 months, leading very closely towards that November 2025 mark of the whole entire switch on? But more importantly, from an investor's perspective, when we're talking about cycles and charts and everything, we'll go into the quant price in a minute in the chart, of course, but look at the cycle pattern. This is, I've always said this, the biggest catalyst in the cycle, the next cycle, in my opinion, will be around CBDCs. And, you know, we're not talking about the digital pound, this, that, and the other. We're talking about the infrastructure behind it. This is where it gets very interesting indeed. And when you've got these kind of news articles coming out now and confirmations from the House of Lords, this is not, you know, they're crazy people anyway, but the point being is these guys regulate everything. They confirm something as law. They confirm it as regulated. And when we switch this on, if you think how many people didn't come into the crypto market in the last 2, 3, 4 cycles because of regulation, because they weren't sure of it or it was too risky. Yes, of course, we'll still have elements of risk in there. But when you've got a stamp of approval from your government at the top level, it's signed off by His Majesty, arguably, eventually as a bill, this is where it gets interesting. And bear in mind, guys, by the way, King Charles is a big member of the World Economic Forum as well. How many more things do I need to throw out here that this is concluding to exactly the time frame we said a long time ago? And this is not one of those things where like, oh, we told you this, we're the first ones, blah, blah. It's not that at all. This is really understanding and defining that now, right now, and the next 6 to 12 months of really interesting points of accumulation as an investor, in my opinion. And yes, the markets could still come down quite a bit. We're still entering a recession, in my opinion. There's still a bit of a bubble potentially to come. The housing market, the commercial entity market is really on a thin edge right now. And if those crash, the whole world crashes, as we saw in 2008, as we saw before that. This could be one of the worst ones. It might swing around, who knows? But the point being is that we have to really keep our eye on the proper technologies and projects out there. And looping this back round to quant, the timing is not coincidental, guys. Well, it is coincidental, obviously. But the point being is that these aren't happening at the same time for no reason. These articles, these news points, these project developments are concluding left, right, and centre at the same time. And we showed you that planogram in one of the previous videos, November 2025, the RTGS system. This is very important. The world is changing in front of our eyes, but the thing is, not necessarily always in front of our eyes, certainly behind the curtains right now. And one day in these next 12 to 18 months, they will open those curtains to the world, and people will be frantically running around to try and invest in the infrastructures, the frameworks, the projects behind all of this. Why wait till then? All I would say, guys, is this channel is for education and knowledge, and I hope a lot of you transfer this knowledge to other people, because it's a great opportunity to get involved, in my opinion. Obviously, do your own research. I'm not an advisor, of course, but I know what's coming for sure. Personally, I've known for probably about 10 years now what's been going on. And when I heard about blockchain for the first time 4 or 5 years ago, it really clicked in my head what's occurring with the whole world. I'm not just talking about the circus craziness. I'm talking about the way we're probably going into some weird dystopian mental world. And that's why I'm firmly trying to believe that there's a decentralized option out there somewhere that we can identify and try and encourage, because yes, we can invest in the infrastructure on centralized systems, absolutely, but for freedom, for the ability to give diversification, for people to become bankable. There's 2 billion people out there, maybe more now, that are unbankable. Giving freedom and choice to people is really important in my mind. But I see this CBDC system being potential, not necessarily a barrier to that, but certainly something that a big populace of the world will be integrated into, because they will have no choice, or they will see it as the only choice, and that's not correct. So I'm going to wrap that topic up there, guys. Hopefully we learned something. Hopefully it's made you think about a few things here and there. But let's go into the chart of Quant, because there have been some actions, reasons why as well. Let's do this. So if we look at the chart here for Quant, we can see that we're currently tracking around this $100 mark. And I've said this is a really important area for a few months now. It's one of those really weird, tricky things in the mind, psychologically, to try and keep emotion out of it as much as possible. Because, you know, when we were down back here in June of last year, back in the $44, $45 range, can you believe that was a year ago? That is absolutely insane, isn't it? But we've had this upward trend. We pushed through the barrier of 100 and we got ourselves up to this 233 mark at the end of October. Now, in most recent times, we have seen this kind of track down, as we've seen with the whole market, to be honest, in their own rights. And we have had the price point of 100 being attacked quite often. And I made this point a while back that actually, if we look at this huge gap between 2021, we can see that there's not too much data points around that 100 mark. This is why we're seeing such, I would argue, in the long term, volatility. What I mean by this is we can see the trigger points here across the board all the way for the last probably 2 years, if you like, nearly, which is showcasing that yes, Quant has arguably moved away from those very lows of sort of $20, $30. Doesn't always mean that it could never come back to those areas, of course, but you will see that there was good traction here at 50, a great buy point. But since then, we've been really pulling ourselves up to these kind of areas. Now, I did point out a while back that $87 was a good area potentially to have some buy orders in, because, as I said, lack of data back here, but there's only a small amount of points at that particular area too. So as we're defining this $100 mark, you can clearly see there's been a few dip downs. So one down here in November 2022 at $94. More recently, we've been going down to that sort of $95, $94 mark on a few occasions, but the magnet of 100 keeps pulling us back. But saying that, the last 2 days, and if I just zoom in here, and this is why I kind of like utilize this particular bar chart now, we can see the opening and closing are not great. They're not great. They're kind of in a bearish momentum. Now, we saw this uptake here on the 16th of June. This came off the back of the Rosalind article that we've just literally gone through quickly a moment ago. Had a great reaction, to be honest, because we jumped up from this opening of $97. We had a high around about the 117, 118 mark, and then we closed on 112, but it wasn't enough to sustain it. We had a bit of a trigger up and it just couldn't sustain, and we pulled it back to the 100. So for me personally, and the point I'm making about this is I'm doing manual orders at this 100 mark. That is for sure. However, I do still have the lower regions just in case with limit orders around this 87 mark. I do have lower ones. I've mentioned this in many previous videos, simply because of these data trends and the reasoning of the fib retracement lines showcasing that there's good points here in the long term of a bearish market, certainly, that we could potentially enter these areas, both on the long term area and a macro level area as well. So these are the things I'm looking out for. I do have those as limit orders purely because I don't have time to check the charts all day, every day. I've just put the orders in at 87. What I do though is each day, and I see this price point around the 100 mark, I am accumulating. Obviously, Not too much, because these are heavy priced units. I'm not like a millionaire yet. One day, hopefully, through the systematic approach of trying to get our investments into massive profit, of course, through cryptocurrencies and other stock market that I'm involved in. But those are areas of interest to me. The one being obvious is the one kind of the area now, but do just anticipate that if you look at this trend line from January, it has been going in a downward momentum. We had this nice traction up, a bit of bounce back as well, but I would anticipate potentially that this line could come down to test these areas here, which we've drawn in on multiple occasions in the past. So that's where my next area of interest is, as well as the current one. We can see on the performance on the right hand side here, it is in negative. It's not hugely disappointing. For me, I'm a long time holder of Quant. I'm trying to accumulate Quant at these lower regions. I do think it's going to be a substantially valued asset in the future. We can even go by the most recent bull cycle back here in 2021, where we achieved round about the 420, 430 mark, which is quite phenomenal, really, especially when you look back at the beginning of 2021, when it was sort of tracking around between $30 and $50. So it's a really good return. I didn't sell any up here. So for sure, I'm trying to accumulate, because I do believe we'll definitely get back to these areas. But I also think we'll go way beyond that. And we could argue, based on fib levels here, this is a guidance, by the way, guys, is that these are trying to project, potentially, based on lower and higher points, that we could get into the regions of 1,000 or between maybe $800 and $1,000 in the next bull cycle as a minimum. So something really interesting to look out for, especially all the things we talked about, the development of CBDCs. I always make this point, guys, irrespective of whether the token is 1 cent or $100, we got to understand, particularly with the financial related projects like Quant, that we're in the early stages still. We're in development stages, not just of the technology itself that they're producing, but the actual utility is in early stages. And we've defined that with what's going on, particularly here in the UK, which is doing across the whole entire world right now, the piloting of digital wallets that will be used by CBDC systems. Whether you like CBDCs or not, the fact of the matter is they are coming. And as an investor, I have two options. I don't invest in these morally because I may or may not agree with certain principles of CBDCs and those areas, or we go and invest to try and make money on systems that will be implemented and used for these infrastructures. They're the two choices we kind of have, or don't invest at all. Then you probably don't want to be here. So the RSIs, just quickly, a quick point here, tracking around 14 days showing 42, 28 days showing 43. These are really good bite points for DCAing at this 100 mark. It kind of confirms what I was just saying. But yeah, I'm just keeping an eye out on that, reducing potentially slightly, but don't be surprised to see some reactional moves as well as stabilization kicks in. This does move in good chunks, sometimes within a sort of $20, $30 movement, even within a couple of days. So those that are day traders or weekly traders can take advantage of that. I'm personally not interested in the selling aspect of it right now. I'm looking for the much bigger gains on those. So keep an eye out for it, guys. We'll wrap this video up there. I've got a few more to do this evening as we're catching up and back from holiday, as I said. So let's keep an eye on this one. It's really interesting to see if we close today over 100. If not, and that's of course another day in a row where we're tracking below that 100, will we sustain that and pull it across again, or will it dip down to these lower regions that we've mentioned? Let's see what happens. Thanks for watching, guys. We will indeed see you in the next update video. Take care and bye bye.